Good afternoon, everybody. Welcome to this Spark Private webinar. We have two outstanding companies to present to you today, OOHPod and Nazare Point. Both are already in the marketplace and getting very fast traction, mainly because of the founder teams having a really credible track record of success. Of course, just in the background for us as Spark Private, we're conscious that it's EIS season. This is a real chance to add to portfolios in terms of building. And I think what's nice about these two companies is that they're very close to, they are in market, they're generating revenues. So they're further along than maybe some of the more, the earlier stage startups that we have on deck at the moment. But I think the other thing as well is with EIS, both qualify for 35% tax rebates, which means both valuations get back into sort of the 10 million euro area, which is bluntly the almost the exact amount of money that's been invested in both businesses today. So that's a really interesting starting point or entry point for any investor when you're already at the kind of the number that's been invested in the company already in terms of valuation. So without further ado, first up it is OOHPod. I suppose the first thing is they're in the parcel um, uh, locker logistics space. We know infrastructure is hot. Um, just on a sort of an investment basis, that both AI and traditional infrastructure, there's a lot of money moving into these spaces. But I think also, particular to the sort of the parcel locker sector, it is important to remember that now almost 40% of e-commerce is conducted through parcel lockers in Europe. That's a stunning number already. So that's the way that the market is going. I'd like to introduce John Toohey, founder and chief executive, with a track record of already two successful parcel infrastructure exits. That Bitline and Parcel Motel were both his creations and his successful exits for investors. So we're delighted to have John on board, and he'll be presenting in the main to you. But he will be joined by Peter Monaghan, his CFO, who has huge experience in scaling up both SaaS models and logistics startups. So we're also welcome Peter and Orla Shields, COO of OOHPod. In fact, the first dedicated parcel motel employee. So she's seen it all. She's 20 years experience in the parcel logistics business, and we welcome her too. So John, I'll leave it to you to put the presentation on screen, and this will be a 10-minute presentation followed by Q&A of about equivalent a number of minutes. Thanks, John.
Thank you, Gary, for that introduction. I should say good afternoon to your audience, and thanks for being here this afternoon. I should say that the presentation I'm going to do for you now should really be seen in the context of the video that we have on the Spark platform, and also there's a presentation deck on there as well that's quite detailed. Whereas today I'm just going to do a 10-minute summary for you by way of a presentation, and then we're going to take questions after that. So without further ado, I'll just see if I can get my deck running here. Okay. So I'm John Toohey. I'm the CEO and founder of OOHPod. Previously, I founded Nightline and Parcel Motel, which many people will be familiar with. Both of those companies were sold to UPS as a group, the Nightline Logistics Group, in 2017. I've been in the business for 35 years or more. I started in my early career with FedEx in Ireland, and I founded Nightline in 1992 and made the exit 25 years later in 2017. So I'm regarded as an expert in parcel lockers worldwide. My opinions get sought from Chile to Estonia, and in terms of the whole out of home space, OOH, which is what OO stands for, I would be regarded as an expert in that area. I was a finalist in the Entrepreneur of the Year in 2012, the year that we launched Parcel Motel. So the team were two members who are with you today. Is Orla Shields, who was with me in Nightline for 20 years and also was the general manager of the Paris Motel division. So after we sold Paris Motel to UPS in 2017, Orla stayed with the business for another 4 years and then came to join me at OOHPod. UPS actually closed down the Paris Motel business in 2021 when we launched OOHPod. So the reason they did that was because we were coming to the market with a more up-to-date solution, better technology, and UPS decided that they no longer needed to be in the parcel locker business, so they shut down Paris Motel and transferred their business to us. So our relationship with UPS is very cordial, friendly, and they're actually our largest carrier client at the moment. I also have on the team Jerry Bowers, who was my CTO at Nightline for many years and is very experienced in parcel logistics. Also developed the technology behind Paris Motel, and he's bringing that experience and know-how to UPod and to the business here. Our operations manager is Simon Jolie, who was with Virgin Media, and he was a client of ours, a large client of ours in our Paris Motel days. And he's a great innovator and ideas man. And he's the guy that gets the parcel lockers out on the ground and gets them up and running and so on. We have a very strong board and investors, key primary investors already. Philip Reynolds is our chairman. He was formerly the owner and CEO of C&D Pet Foods. He acquired the business from his, it was a family business that was started by his father, Albert Reynolds, the former Taoiseach. When Philip took it over, it was turning over 15 million. When he exited it to Larry Goodman, it was turning over 600 million and was the largest white label pet food manufacturer in Europe. We also have Johnny Cosgrove from Temvar, and Temvar is the family sort of office or the investment vehicle of the Carton family, who are also in the food business and were very successful for many years. BVP, who are an EAAS fund, are also one of our main investors, and Stephen Burdock from BVP is on our board. Another investor are the guys behind JMC Logistics. They're a big logistics and trucking and courier operation. And Gareth Thornton, the managing director of JMC, is also on our board. So we have a really strong board and really strong corporate investors around the table. So in terms of what the business does, we provide an open access parcel locker solution. So it's open access and what we refer to as agnostic. So we roll out white label parcel lockers branded as OOHPod, but they can be used by any carrier, any consumer, and any merchant directly. So, for example, UPS, DHL, and DPD use the parcel lockers as if they were their own infrastructure, and they pay us, and they make the parcel lockers available to their customers. So instead of, if you go to other European countries and the UK, for example, you'll see that parcel operators might have their own parcel lockers outside supermarkets and so on. But in Ireland, we're providing an agnostic open access network that can be shared by all. So it cuts down on the need for couriers to have their own parcel lockers, and they can use ours as if it was their own infrastructure. It's convenient because most of our locations are outside Tesco's, Lidl's, Musgraves, Circle K's, so they're accessible 24/7. The sustainability argument around parcel lockers is it reduces CO2 emissions because a courier can come to a parcel locker and drop multiple parcels at the same time in the one stop rather than going to individual households. And he can also pick up parcels that have been dropped off by consumers at the same time. So it's very efficient from a cost point of view and also from a sustainability and carbon reduction point of view. We have strategic partnerships with many retailers, and I'll go into that later in a later slide. So, as I referred to earlier, as a fully agnostic network in the Republic of Ireland, we're currently working with UPS, DHL, and DPD, who have done deep tech integrations with our systems so that they can use the parcel lockers as if it was their own infrastructure. And then through another stream of business, which is where consumers register with us directly and get what we call a new ID. That means that a consumer can use any of our parcel lockers as their delivery address. They simply give the parcel locker as the address when they're ordering online, say from Amazon. They quote their UID in their delivery address, and then any courier on Post, Amazon, GLS, or any of the non-integrated carriers can come along and put parcels in our lockers on behalf of those customers. So in Ireland, we have direct relationships with UPS, DHL, um, and DPD. And in Northern Ireland, where we have DPD, Collect Plus, Yodel, which is a big carrier in the UK, Amazon, and Every are also doing business with us in Northern Ireland. That's a relationship that we expect that we would hope to continue on into Great Britain as we refine our UK product in Northern Ireland. So I'm just showing here a screen grab of an Apple, the Apple checkout. It's for an order that was going to for a customer in Belfast. So when the customer selects on the Apple checkout, so this is the actual Apple website, and they select that. If they don't want to have it delivered, they can say, "I'll pick it up." You can see down here that just down below there, you can see OOHPod Shore Road. That means that we appear, and you can see we're an authorized Apple pickup location. And we're on many websites like that. That's Apple. We're also on Nike, Under Armour, a lot of big brands. And that's through our tech and our commercial relationship with UPS. So we don't have a direct contract with Apple. Our contract is a UPS, and UPS, through their service called Access Point, provide this interface to Apple where our parcel lockers are shown as authorized Apple pickup points. So it's very important, and that drives a lot of business and consumers to our parcel lockers. But it's done through the retailers themselves and through their association with either UPS or DPD or DHL, whoever the carrier is in the background. Vinted is very important, and if anyone has any has friends or family in their late teens or early 20s, they'll all be talking about Vinted at the moment. Vinted is an exponentially growing platform where people can buy and sell items from each other. So it's huge growth in secondhand, mainly fashion items online, but they sell there's other products exchanged as well. But it's mainly where people go to buy and sell secondhand clothing. And the second-hand clothing market in Europe is actually growing faster than the new clothing market. And what's called C2C, which is consumer to consumer commerce, is actually the fastest growing element of e-commerce overall in Europe right now. So Vinted is so important, and UPS is a major carrier working with Vinted. And through Vinted and UPS, this drives a lot of consumers to our parcel lockers. So a lot of consumers, we actually don't do an awful lot of advertising. We do a little bit of on Google, and that's about it. But a lot of consumers become aware of our parcel lockers because Vinted and UPS and Apple and all of these other companies have actually sent them to the parcel locker in the first place, and then they become aware of the business and our other offerings when they search us online. We have about more than 40,000 direct consumer subscribers right now, and I'll explain that a little more later. Financials, I suppose just go through the top line here. Peter Monaghan, my CFO, is online. He can come in on the Q&A if there's any more questions about the financials. In 2024, we turned over €476,000. We're heading for north of €1 million in 2025 and 2.5 million in 2026. You can see that we're coming close to break even, and we expect a positive EBITDA by the end of 2026. So I won't dwell on this slide. This is quoting GeoPost, which is actually the head office, the headquarter company of DPD in Europe, and DPD being one of the largest parcel delivery companies in Europe, owned ultimately by the French postal service La Poste. And they every year do a very detailed consumer research study that the whole industry sort of waits to see because they spend a lot of money on it, and they do very detailed research. So just a few of the headlines there. Of all e-shoppers, 48% are regular shoppers. So that means they'll buy regularly, and they'll be picking up from our parcel lockers on a regular basis. Price sensitivity is very important, and that means that delivery to a parcel locker is cheaper than a home delivery. So it means that they have a lower cost. Retailers have a lower cost option with parcel lockers. And if you see here, 72% of all e-shoppers online are that critical C2C, consumer to consumer. In other words, they've been on a platform like Vinted, and bought or sold something online to each other. This is a massively huge growth area. It's grown exponentially, particularly in Europe, the EU. And in Europe, as part of this survey, and Gary alluded to it earlier, 44% of regular e-shoppers choose out-of-home delivery solutions. So that's either a parcel locker or from a corner store or whatever. So in other words, not to have a parcel delivered to their home. And predictability is important to 70% of shoppers. And a delivery to a parcel locker is totally predictable because the courier puts it there. And as we say in one of our slogans, then the parcel does the waiting rather than the customer. We've been working carefully to build up location partners because very critical to a successful parcel locker network is that we get the parcel lockers into locations where consumers are going anyway and find it on the most convenient locations. So Lidl have been a great partner for us, as have the Musgrave Group with Centra and SuperValu. Tesco also phenomenal. You'll see there in the photograph, this is really one of our prime locations. That's the Tesco store in Temple Bar. So the next time you're in Temple Bar in the town, have a look inside the store there. You'll see us right inside the door. It's a hugely successful location for us. The city centre tends to be a challenge for us. So we're working with Q Park, and we already have parcel lockers at some of the Q Park parking multi-story car parks in the city centre. For example, we're in the Stephen's Green Centre, and we're also in the IFSC in the Q Park there. They're two of our busiest locations in Dublin. Tesco, as I mentioned, and then we've got Circle K just signed up for this there a couple of weeks ago, and we installed our first two Circle K petrol stations last week in Kilmainham and in Benton, I think it is, near Sanford Road, near Clonskea in Dublin. So Circle K, being the largest petrol station operator in the Republic, are going to be an important partner for us. We have a number of revenue streams. So I've tried to explain this again because some people get confused with this. So we have direct to consumer. So in other words, as a consumer, you can come to our website, sign up, and get what's called an OOHID, and you buy a bundle of uses up front. So then if, for example, you live in Ranelagh and you're out at work all day and you live in a red brick house where the door opens directly onto the street and there's nowhere safe to leave a parcel, you can sign up with OOHPod. You get a new ID, and when you're ordering from Amazon, you put the address of the OOHPod in Ranelagh as your delivery address, along with your 8-digit OOID. And then the Amazon driver, when he comes along with your delivery, goes to the parcel locker, keys in your OOID, stores the parcel in an individual parcel locker for you. And then we'll send you an SMS with a unique one-off PIN number to go and pick up the parcel. And then we'll deduct a use from your account, from your prepaid account with us. Okay. The second revenue stream for us is direct carrier integration. So that's where you're sitting at home and you get a text from DHL to say we have a parcel on the way. Click here to manage your delivery. So you can go into DHL. DHL have a system called Service Point, and you can say you can redirect your parcel delivered to a new pod, and then DHL pay us for that, and DHL we'll send you the PIN and the text to go and pick up the parcel. So DHL then pay us for the transaction, and you pay them. Now, some people say to us, why would I subscribe directly as a consumer if I can do it with DHL and they'll pay for it? So the answer to that is it's a mix of things, really, because for example, Amazon and An Post aren't directly integrated with us yet. So you might want to collect all your parcels from the same parcel locker all the time. So it's a mix of things. Some parcels come to us where the carrier pay first, and some come to us where the consumer pays us directly. They're two different channels of business. We also have here, you'll see in this photograph, we have advertising screens. We've just started to market those. We've been installing them for the last couple of years. We've been building up the parcel locker network. We've been using the advertising screens to advertise our own services. But you can see there on the left-hand side that we've also attracted some commercial use as well. So third-party advertising we see is an important revenue stream, particularly for the parcel lockers that are in high footfall and high sort of visibility areas like at supermarkets and super value stores and so on. The last revenue stream is we actually sell parcel lockers into private residential developments. You can see two of them in the photographs there. One is at Niche Living in Ballsbridge, and the other is at student accommodation actually in Prussia Street. So the developers of those residential developments come along to us and actually buy a parcel locker from us. It's a capital sale. We install the parcel locker and it's for the exclusive and private use of the people in that residence. And we get a fixed monthly income then for maintaining the parcel lockers and the software license and so on. A revenue stream that new revenue stream that we've just added in the last couple of weeks, it's particularly timely because of the demise of fast rate couriers, is that you can come to our website to send a parcel, and what will happen is you've got three options. One, we have leave to collect, where small customers can book a parcel, book a locker in a parcel locker, if they sold something on social media or on Dundee or whatever it is. They can book a parcel locker, bring the parcel along themselves and store it in the parcel locker, and then we'll notify the recipient that it's there for them to collect. So a lot of recipients don't like me, especially on Dundee, don't like to meet the people that they've sold the parcel or sold the item to, so it's a way for them to go. Then we have a service called Locker to Locker, where you can book this online on our website, and then UPS will come along, pick up the parcel and bring it to another parcel locker. And then we also have locker to door, again, where you can book on our service, book on our website, drop it to a parcel locker, and then UPS will come along, pick it up from the parcel locker and deliver it to the door. Gary, how am I doing on time? You're muted there. Sorry, I've been on 20 minutes here, I think, or about. So listen, the next thing is the revenue stream for the digital signage. We've just on digital signage, we've partnered with Focal Media, who are experts in the whole digital out of home market, and those guys are helping us roll out our digital screens on the that I showed you on the parcel lockers earlier, and they're marketing the digital screens for us. So they're sort of an agent. We're selling the space on the parcel locker screens. We're not getting into the digital advertising business. We're leaving it to the experts in Focal Media. Here's some examples of private locker sales. We've big customers like the Comer Group, Niche Living, and Marlet are some of the examples you can see there. To date, we've raised about 8.7 million in funding. We have headroom in our EAAS scheme of about 2 million. We're seeking about 1 million now. We've allocated 500k of this to Spark crowdfunding, or Spark Ventures as I know now. And our plan is to use that money for further network development, to grow our consumer base, more promotion, and to prepare us for entry to the GB market. That will just give you a bit of an idea of the spread of our locations around the country. There's actually more locations at right now than there are on the map there. That map's a little bit old, but it's just to give you an idea of our geographic spread. Thank you. Any questions?
Thanks, John. Can I invite my colleague Fergal Power?
Yeah.
And he has a few questions probably we're taking from him.
Just the first one, John, just right off the bat is regarding the maintenance. So how is the maintenance and upkeep of the lockers managed?
Okay, so we do it ourselves, Fergal. We maintain them and we clean them and whatever else. And then we've different arrangements, excuse me, with the private operators, private sales. Some of those guys will do the cleaning and maintenance themselves, and we just come along if there's an issue, and just to keep the software up to date and that kind of thing. But they're actually quite low maintenance. Each parcel locker only needs a visit every few months. It's once they're out there and sitting there, most of the software and technical stuff we can do over the air, because they have a 4G modem on board, and we can communicate with the lockers through a central console, and we can diagnose them, see if there's any problems, so on, patch the software, all of that kind of stuff can be done remotely. It's only when we have to go to visit them where they need periodic cleaning and a little bit of maintenance. That's every few months, depending on how heavily used the parcel locker is.
Perfect.
John, a quick question here coming in actually from one of our internationally based investors. How much cheaper is out of home delivery versus to home?
Well, there's lots of figures bounced around on this, but I think the one that everybody agrees on is it's at least 30% cheaper to drop to a parcel locker than to deliver to home. Now, thinking about final mile and parcel delivery, okay, 50% of the cost on average of parcel delivery is in the final mile. And that's, in other words, between the local delivery depot and your house. And then also 50% of the carbon committed in a parcel delivery is in the final mile. So a parcel locker, by giving a consolidation point at a local supermarket like Tesco or Lidl, gives a driver. So it means a couple of things. It means that couriers can move throughout the night because they're accessible 24/7. So you don't have vans stuck in traffic during the day. And then it wouldn't be uncommon, for example, for UPS to go to our parcel locker in Tesco Clare Hall Shopping Centre and drop off 40 parcels for customers to collect and pick up 20 parcels for customers to collect. So if you think about it, and he does that usually that takes the driver less than 10 minutes, about 8 minutes to do that. So you can imagine 60 parcels if you had to go to individual houses to pick up or drop off. That'll be a full day's work for a van driver. So it's really efficient from a cost point of view. And it's also very good for the environment in terms of reduce the carbon output.
Thanks,
Brilliant.
John. Fergal, back.
Actually, yeah, really good question. I was interested about this as well. Can you expand on how the digital advertising screens contribute to revenue? Just an idea of maybe where you see that coming in, and also what types of advertisers are currently showing kind of the most interest. I saw Lucozade there, but is it a mix of different companies?
Yeah, so our objective, say in Ireland, is to get each parcel locker to an average monthly revenue of around €2,000, and in some circumstances, the digital advertising screens will actually probably contribute as much to the revenue stream of the parcel locker as the parcels themselves will. So, for example, in a busy area like Ranelagh or Rathfarnham shopping centre, the experts in this focal media would expect that in time, once we're established as a presence in the digital screen market, that those machines could attract up to 800 to €1,000 of advertising revenue a month. Now we're just getting established as a player in that market. We have to have an established market, established sort of network. Focal media, if you go really into any retail store in Ireland, whether it's McCabe's pharmacies or Circle K petrol stations or SuperValu, where you see digital screens running, the chances are focal media are the guys behind the running of that network and the marketing of the screens that are there. So these guys are really the experts in this business. And so the way we have the tech sort of set up and the hardware set up at the parcel locker, the digital screen is completely independent from the operation of the parcel locker. It has its own little content management box inside it, and that goes back to focal media, to those guys to manage it. So they manage all the content, they manage the uptime, and they market the advertising services on our behalf to the community.
Excellent.
So, for example,
single point of payment directly back to you, John. So it's just focal.
Yeah, so we just operate with focal media. We just do a revenue share with them. We're not pretending to be experts in digital media. They are, and we're just providing the screens and the hardware, and they operate completely separate. So the focal media guys have their own equipment in our machine that's separate to the operation of the parcel locker. But let me tell you, we've had inquiries lately just from likes of the National Lottery. We did some trialing there on some consumer products advertising during the summer. That's where you see that Lucozade ad coming from. We had Magnum ice creams and all that kind of stuff. But I mean, the whole advertising business, some of it comes directly from the brands, some of it comes through advertising agencies. There's a whole sort of layer. It's a whole sort of area by itself that requires experts to market the screens rather than us trying to making an entry into that whole sector. So hopefully focal media, we've picked the right partner to do that.
Brilliant.
John, just conscious of time here. Last two questions quickly, just on scale up. What are the criteria you're using to select new locker locations? And just to, I suppose, paint a picture around what the next 12 to 24 months looks like in terms of expansion into the UK.
Okay, so in terms of how we select a location, it's basically we start with the customer. As Jeff Bezos famously said, start with the customer and work back from there. So we start with the customer and say, where are our customers going anyway? So the chances are they're going to a petrol station, they're going to a supermarket, somewhere where they're combining the activities of picking up the parcels from a parcel locker and doing their shopping or putting petrol in their car or whatever it is. We did some market research last year, in June last year, and 82% of the respondents, 1,400 people, responded to the market research that was carried out by Opinions, an independent market research company. And 82% of the respondents said that they combine the activity of picking up or dropping off parcels with doing their shopping or something else. So that's how we pick it. We look, in the first place, we want to be in places of reasonable population density. So we tend to look for towns in Ireland that are, at the moment, that are more than 5,000 population. We put particular emphasis on urban areas like Dublin, Cork, and Limerick, Galway. And then once we're in those areas, we tend to look for areas that are convenient to customers and where we're not taking them out of their way to pick up or drop off their parcels. The UK expansion, we're sort of refining our UK product in Northern Ireland because we're the only parcel locker operator in Northern Ireland of any scale at the moment. All of the attributes of the UK market are there, all of the retailers, all the carriers, and so on. We're working with Royal Mail and Every, who between them have about 70% of the market in the UK. And we're discussing with them our strategy as to what we might be able to do for them when we go to the UK. So we're expecting to sort of land our first machine on, in a UK as a mainland, and I'm putting it in fairly commas, UK mainland city, probably second half of next year.
Okay. And last question, and a critical one. What's your thinking in terms of time frame for an exit for investors, and at what sort of multiples would you be thinking that would be industry relevant?
Okay, so I think in terms of time frame, I think we're going to be acquired by one of the large European operators within the next 3 to 5 years. There are some really big operators in Europe. One is Quadient, it's a French PLC. And then you've got carriers themselves, really large carriers that have an interest, that are rolling out their own parcel locker networks. So I would say we'd be taken out by a European or a UK PLC within the next 3 to 5 years. It'll be because the market is consolidating very rapidly in Europe and the UK. And I think, we were, having discussed it with you guys, I think we're saying we're comfortable that investors coming in at this stage should see about a 5x return on their money for that.
Thank you very much, John. Thank you, Orla. Thank you, Peter, and thanks, Virgil. Again, nice to finish on an exit story. You have a track record, so it's not pie in the sky. I think you have a firm plan.
Yeah, from an exit point of view, I don't see us being still. I've done a bit of investing myself, especially when I left Nightline and was acquired by UPS. Invested in some small companies, and that was 8 years ago, and I'm still invested in some of those. With no sign of an exit. I don't really want to be hanging around for that length of time. I don't want to keep investors hanging around either. I know what it's like. So I mean, EWIS money is 4-year money. I think we'd be comfortable enough that at the end of the 4 years we'll be looking at our exit. And I think that what I'm actually trying to do at the moment is hold off. We've already got expressions of interest from large companies looking that are sort of circling around overhead. What we're really trying to do now is hold off while we build more value, so that we get a good exit for everybody.
Thanks, John, and thanks everybody. Just again, sort of wrap up. It's 35% EWIS. It's hot. It's e-commerce infrastructure. It's parcel infrastructure. There is a lot of money already invested in that. I think, John, you'd said to me before, it's your single biggest holding, your single biggest investment. So leaving aside other earlier investments, this you're all in on this. So thank you very much. I'm going to switch over now to our Nazare Point presenters, if that's okay. And if there are any questions, further questions for John and his team, we can do them offline. Thank you.
Thanks, everyone.
All set. Just for
okay.
everyone, I'm joined by Dermot Farrelly and Declan McAvoy. This is a team steeped in institutional experience. They've been fixing problems for the investment management industry for years. And when I talk about problems for the investment management industry, I'm talking about performance and I'm talking about cost. The Nazare Point team have basically spent a decade building, developing AI and proprietary data sets to solve those problems. They basically the end product are systematic trading strategies developed with proprietary data and AI. The demand is definitely there. There are a lot of in the industry itself. The investment management industry is enormous, but there are many institutions right now looking for solutions that the Nazare Point team can bring to their operations. The good thing, as I said at the outset, with both OOHPod and Nazare Point is they're already engaged. They already have presence in the marketplace. They're already earning revenues, and they have what we call institutional traction. In the case of OOHPod, is with the primary carriers. With Nazare Point, it's with hedge funds and umbrella distribution institutions like Hurricane Capital. I'm conscious of time, so I'll leave the executive team led by Declan to present to you. But just by way of small introduction, Declan is the chief executive, has been a senior exec with the likes of Citigroup, UBS, JP Morgan over the years, and is actually currently a board member of our National Centre for AI, CEDAR, based in UCD. So, the AI thing is not just a term. This is real for Declan, and they've certainly applied it in the Nazare Point offering. Dermot Farley, again, an institutionally hugely experienced guy, headed up the #1 equity sales and trading desk in Ireland for years at Davies, and has a huge international network of within the investment industry. Mike Mura has 25 years in experience in quantitative finance, is a PhD, and held previous senior roles at the likes of GSAM and Tobam in the investment management space. So he certainly understands both sides of the equation in terms of providing solutions, but also being the investment manager. And our last member of the Nazare Point team can very much talk to that. Mark Caslin has a massive currency trading experience. He founded and built his own currency investment management company, Alder Capital, taking it from 0 funds under management to well over $1 billion. And whilst doing that, also clocked probably one of the best currency fund performance over that period. So it's a highly impressive team bringing some really cutting edge solutions. And I'll leave it at that for the moment, apart from saying, again, it's 35% EIS tax rebate on this investment. And in terms of housekeeping, put your request Q&A not on the chat, otherwise they won't get seen. Declan, over to you. Thank you.
Gary, thank you very much for the introduction. And thank you to everybody who's on the webinar for participating. Very flattered that you've decided to join, and hopefully we can kind of shed some light on what we're up to. So I think Dermot's going to drive the presentation slides here. So we're going to use some slides to kind of illustrate what Nazare Point is all about. So I guess at the outset, the name Nazare Point it's named after the home of the 100-foot wave in Portugal, just north of Lisbon. It was, we felt it was a pretty good metaphor for what we're up to, which is trying to navigate the choppy waters of the markets by using technology to aid our decision process. So is the screens on there, Dermot?
Yep. Yeah, you should be able to see them, yeah.
I can't quite see 1 second now, sorry. Not have to worry. I actually can't see the slides during 1 second. Let me go back over here.
Everybody else can, I think.
Okay.
Can everybody else see the slides?
Gary, yeah, I can see them now. Sorry, that's my fault. Okay, so who are we? Nazare Point in a nutshell. So basically, we are an AI-driven and systematic investment firm. So, our AI journey started around 2016, and we started with a blank sheet of paper and on campus at Nova UCD was our original HQ. And we sat down with CEDAR, the Centre for Advanced Data Research, and said, okay, this artificial intelligence stuff looks very interesting. How could we make money for clients by using it to navigate the markets, by essentially building suites of predictive models? So that's what we did for quite a while. And then about 2 or 3 years ago, Mark came on board, and he brought the DNA from Alder Capital as well. So what you have now is a combination of our AI research originally and Mark's Alder Capital DNA all in one firm, and all feeding into our investment management processes. So we have about 7 years of research and development in collaboration with CEDAR. As Gary mentioned, I sit on the steering committee, the board of CEDAR. That's kind of very useful for us, really, because Obviously, AI is a very, very fast moving environment now with the advent of all the large language models, ChatGPT, etc. And it's important to have some kind of a system where you get to see what's going on, what developments are germane to us and what aren't in the whole AI area. And having a perch at Cedar is a very useful perspective to see what's going on, because Cedar is essentially application of artificial intelligence across all verticals. It's kind of vertical agnostic. So they'll have projects going on in space tech, in ag tech, in property tech, in reinforcement learning models and robotics, for instance, that might have an application for us. And all of those areas, they're not financial services, but they might have some breakthroughs there or some interesting insights that we can then bring back to Nazare Point and kind of really feed back into our R&D process. So, the promise to the client really is that we have the best systems available to us on the pitch for them at any one time. So we have a very experienced management team, as Gary mentioned. Some of them, we didn't bring everybody on board today. It'd be just a bit too many. But our chairperson is who came on board about 6 months ago, Sinead Fitzmaurice. Sinead's very well known in fintech circles. She's amazing, track record, amazing woman. She took a blank sheet of paper as well at TaxBack and said, there's an opportunity in global payments here. And that was built by Sinead and her team, with her leading as CEO into Transfermate, which is a unicorn. So it's actually one of the first Irish unicorns. And she stepped down from that role back in around March, April. And luckily, she agreed that she had the bandwidth to join us as chair. So we're very happy to have her on board. And obviously, she's very well connected and very, very helpful. So that's kind of the senior management team. Is Sinead the chair? I'm the CEO. Dermot does business development. Mark is on board, with all the R&D. Michael Mura, Dr. Michael Mura is on the call here. Hopefully he'll get a chance to speak. So he's a great background, in terms of running money at Goldman Sachs Asset Management and at Tobam, and he's our CIO based in London. So the team is very experienced. Not to leave out Linda. Linda Leaney is our Chief Operating Officer, and essentially the team is split geographically between London and Dublin. So the R&D element of things is in Dublin, and that's the company that owns the hedge fund in London. The hedge fund in London is called Nazare Point Investment Advisors. So Mike and Linda and Gary, our head of trading, sit in London. Myself and Dermot go back and forth, and Mark and Kieran are back in Dublin, and so is Sinead in Kilkenny. So the opportunity really revolves around what the kind of dilemmas that our clients face. So who are our clients? Our clients basically are institutions, large institutions who allocate capital to be managed by money managers like us in the markets. So their real dilemma is to find asset managers who are, as it says here in the slides, who can deliver better risk-adjusted returns, while actively trying to manage the risk in the market. So this is measured in a number of different ways in the markets over the years. Many metrics have been developed. One's called the Sharpe ratio, after Professor Sharpe, and the higher that number is, the better. What does it really mean? It means for the level of risk you're taking, you're maximizing your returns. So if you're taking risk of X, you really have to get as much return for that risk you're taking as possible, and that's what we're all about. So in kind of some of the trends in the industry, I'm sure you're aware of, have been this focus on passive investing. So, buy them high, sell them cheap, just be long the market, pay low fees, and that compounding, will take care of everything. The market timing element of things is left completely, out of the equation in that scenario, and we think that's a lot of opportunity for us. So basically, our AI and our algo systems are all about trying to do a better job around market timing. So if one can actually get out of the market when there's big corrections going on downwards in prices and get back in again, that has a very, very powerful compounding effect on portfolios. And to achieve this, we have both algorithms and AI systems. The AI systems, essentially, the choices you make around what to feed those AI systems are crucial as to how you're going to see them perform live in the markets. So maybe you go to the next slide, please, Dermot. So what does the process look like? This is a busy slide, but really what we're trying to say here is that it's kind of, input at one end, what do we actually feed the AI systems? And it's not a trivial matter. Like, the choices you make around what to feed the system are absolutely crucial. So we have, we feed it market prices, so it knows what's going on in the markets, and then we feed it some other information that we've developed over the years. And these are really proprietary data streams of what other players are doing in the market. So we get a lot of information from various clearinghouses. It's anonymized, it's been run by all the lawyers in London, etc. So it's perfectly kosher. But we can use it then to build a kind of picture of what's going on in the market. And when we see certain patterns of behavior combined with market prices, then we can take some action in the portfolios. So essentially, we have these inputs, as you can see in the top part of the chart: market prices and this market activity data stream sets. They go into our AI systems. Our AI systems are basically an ensemble of neural networks, is the technical phrase. But essentially, they are machine learning algorithms that are very good at detecting patterns. And then when we get certain types of patterns, then we will short the market for kind of a very defined period of time, or square up the positions in the portfolio depending on the particular strategy. So that's kind of the AI system in a nutshell. What's the output? So this is the output. This is the S&P 500 in futures format. And the blue line is, and then the orange line is the Nazare point portfolio performance. And the green line is if you're invested in the S&P 500 front-end futures. So as you can see, it's a material outperformance, particularly in times of stress. You can see in the COVID period in March 2020, we have some volatility filters that took us out of the market for a while, and then we got back in and we caught some of the short days. That's the kind of big upsurge in the blue line in mid 2020 means we caught some of the short days. And then in 2022, when the market really had quite a torrid time, you can see we were kind of flat to sideways there, and that was really when we were kind of going short the market at the right time or taking ourselves out of the market. So it's been very effective, and it's the models have essentially traded exactly how we hope they would since we've gone live in the market. So this next one, really it's about digital assets. So I guess a kind of a caveat to mention at the outset is that we are by no means crypto evangelists. In fact, we kind of divided opinion amongst the management team about whether crypto will even survive as an asset class in the long term. But we are firmly of the view that a buy and hold strategy in such a volatile asset really gives up a lot of opportunity to do a better job. So we have retrained some of the systems that were used at Alder Capital to apply them to the Bitcoin and Ethereum markets. And the systems like Gary mentioned at the outset, Alder used these systems to manage a lot of money back in kind of the period between 2000 and 2019, when Alder was managing money for outside investors. AUM got up to a very impressive just short of $1 billion. Turnover every day was huge. So, as in there was a lot of activity in the portfolios, and that kind of amounted to about $150 billion of turnover a year. And these kind of seaworthy and well-proven algos have now been adapted to great effect to digital assets, to Bitcoin, and particularly to Ethereum. So what do? We offer 3 different strategies. We offer a flagship Bitcoin strategy, which basically means that when we have the strongest signal to be long, we're slightly over leveraged, so extra 10% on the portfolio. And then we have kind of 4 levels really in the portfolio: 0, 35% invested, 65% invested, and like I say, 110% invested. We have a lower volatility strategy that just targets a much lower drawdown, because that's what some of the more sophisticated investors will do. They will have specific parameters around drawdown levels. That's in other words how much the strategy has ever lost in any one period. And then we have an Ethereum strategy as well, and that's definitely not for the faint-hearted. Volatility is very high in Ethereum, but again, we'd be firmly of the view that an actively managed strategy is a lot better than just a simple buy and hold. I guess an interesting, additional offering that we have is the fact that we can offer these strategies both within the crypto environment, or if you're more conservative, within a traded futures environment. So the futures contracts that will be in the portfolio are actually traded on the Chicago Mercantile Exchange, which means that they're really in a traditional finance wrapper, and the sophisticated clients as they are, don't really have to worry about all of the existential angst around crypto. So there's not going to be no kind of impact from the next FTX, the next Sam Bankman-Fried event occurring, because they have exposure to Bitcoin, but it's actually within the plumbing of a traditional finance area. And what's the output there? Again, it's pretty spectacular, to be honest. This has gone live about 3 months ago, but this is again the same compounding effect. If one is able to get out of the market when Bitcoin is in a corrective mode and it's going down, the impact on compounding impact on the portfolio is really, really impressive. As you can see here, this is a chart that goes from the 1st of January 2020 to date. And you can see that if you have $1 in our strategy, you get about 85 times your money. If you have it in Bitcoin currently, you get about 13 or 14 times your money. So Dermot, I think next slide, please. So this is just a typical what you see in our industry, a kind of monthly return grid showing how things are going. I guess the interesting thing of note in this, just kind of hot off the press, is November, where our systems decided to get out of Bitcoin just at the end of October, actually, and only got back in during the week, I think on Tuesday. So therefore, during this kind of particularly aggressive sell-off in Bitcoin, we were kind of out of the market at around 111,000 and got back into the market at around 91,000. So that's a kind of a 20% correction that the systems caught very well. So I think we'll move on there, Dermot. Thank you. So this is just typically what you see in terms of statistical output to show a sophisticated investor when you're talking about the strategy. There's a whole bunch of ratios in there that you may or may not be familiar with, like a Sharpe ratio I mentioned earlier. 2.4 versus 0.82 is a very, very impressive performance. We mentioned drawdowns. Maximum drawdown is like half of what it would be if you're just buying and holding Bitcoin. And then the portfolio time of market, again, illustrates what I was saying earlier about, being either 100% invested, or in this case, 110% invested, or 0 or 65 or 35. And you can see from the pie chart, the various time and market of the portfolio. So there's a good chunk of time there, about 25% of the time where it's square. And obviously the hope is that that's during periods where the price is correcting down aggressively, as was the case this month. The navy blue box there is something called upside downside capture. Sorry, George. That's just really, it's a good proxy for, what exactly are we up to as a firm. This is what we're all about. So we're kind of our kind of proposal to the clients, really, our promise to the clients, is that what we're going to do is manage your portfolio to capture most of the upside that's available. And then when things get turbulent and volatile on the downside, we take evasive action. And we're using both algorithms and AI and combinations of models to achieve that end. Those stats, I guess, they have to be taken in context. A upside downside capture ratio of about 0.5 is regarded as very good. So you can see we're at pretty stellar numbers there. At what's it, 2.34. And then I think the next slide is about the team. So we kind of mentioned them already. Sinead is the chair, Mike is the CIO, Linda's the COO, I'm the CEO. We all have a lot of experience. It's great to assemble a team like this. It's a real pleasure from my perspective. And then we have Kieran as the CFO, Dermot as head of business development, and then Gary's head of trading, and last but not least, Mark, who brings an awful lot of experience and track record to the enterprise. And then what's the offer really in terms of investors? Why would you want to do this? Well, what we're doing at the moment is we are in sales pipeline and discussions with a lot of large, sophisticated investors who allocate to strategies like this. So they will be ranging from funds of funds to endowments, pension funds, sovereign wealth funds, etc. But in order to get their attention and to get past what they call operational due diligence, when they actually take a look at you and are considering giving you money to manage, you really have to be able to demonstrate that you have a balance sheet, that you're going to be in business for the next 2 or 3 years, independent of what they decide to do, allocating to you, etc. So we just thought it prudent to raise some money right now to do that. So that's what the purpose of the raise is, really, is to put some more working capital into the business. I think, as Gary mentioned, we probably spent about, in total, at Nazare Point, about 8 million euros so far to get this far. And the valuation, a pre-money valuation, is at 16 million. Justification for that really is that we think we can deliver quite a big multiple if we get this right to investors. You can see some of the forecasts there. Really, it's about at what pace can we gather AUM. EBITDA forecasts, if we get to where we want to be in 5 years' time, are very, very strong. You can see that the EBITDA number overall is about 49 million. That's driven by fees that we charge in terms of management fees and performance fees on those assets. In particular, digital assets is very interesting because the focus on fees is a lot less intense than it is in more traditional markets, because it's just so volatile. People are willing to pay the fees, in a greater sense than they are in more traditional markets. In terms of exit, we are probably going to think about listing this company towards the end of 2026 if we get to some of the AUM targets there, or we might just keep it private, or we might actually end up doing some kind of a JV or a trade sale, essentially, to some of the asset managers in the industry. The asset management industry, despite the buoyancy of the markets, it's actually under a lot of intense pressure, particularly in the UK, where a lot of the discretionary active managers have frankly underperformed the market. The rise of the Magnificent Seven within the S&P 500, while it's great for the investors who've been holding those stocks, has been quite problematic for average active managers because they haven't had in their portfolio. So essentially, they've been underweight those stocks, and their performance has kind of lagged behind the S&P 500. So as a result, a lot of the investors who have money with them are putting a lot of pressure on them around the fees. And also they're losing assets, which is not a good place to be. So, the net impact of all of that is that there's going to be a lot of mergers and acquisitions activity across the sector, and we're already talking to various people about how we might take advantage of that, because obviously what we're all about is growing our AUM as rapidly as possible, and you can grow it organically, which is what we're intending to do and already advanced in doing, but also you could grow it inorganically, where you would actually get assets from some of these existing managers.
Declan, I'm conscious of time here. I think
sure.
Good finish, good exit on the plan. Obviously, there are milestones next year that could trigger corporate activity or even a listing. But I am going to ask Fergal to just step in there with any questions coming from investors on the call right now.
Yeah, sure. Just the first couple of ones here. Thanks, Declan and team. So just in terms an AI question, just what is, it's a very competitive space for, in the investments and money management space. What's protected competitive advantage? Effectively, what's your secret sauce?
Well, I guess if you were to start from scratch, if you say you're a discretionary manager in the UK and you haven't done anything about AI so far, and you say, right, what am I going to do here? Well, to assemble a team of scientists like we have, in the current environment, would be, the budget would have to be 20 or 30 million just to get going, and then you could spend 2 or 3 years and you come up with nothing. So what we have is we have a lot of, hard yards done since about 2016 in seeing what's useful, what's not useful is quite important too, what AI can do, what it cannot do. And I think it's very important to maybe get some input here from the CIO, because he also has been looking at this for quite some time. Mike, do you want to chime in there?
Yes, can you hear me?
Yes.
Yep.
Right. Well, so AI is a very broad church. There's a lot of different sorts of AI. The ones which we find most useful are related to machine learning. So although ChatGPT is solving lots of problems for other aspects of business, it's not the area in which we've been focused. We've been focused on trying to extract the best amount of information that we can from data that we receive. And so in our world, it's a balance between information and noise. And if you get more information than noise, if you get that balance correct, then you have strategies which will work well. Now there are many possible ways of doing it, and others may try other approaches, but our approaches have been tried and tested over a long period, and that's why we have confidence in them.
Excellent, thank you.
Just getting a couple of questions there, Declan, in terms of the, I suppose, management compensation for now. The observation quite low. How does that work, or how does that phase in over time?
Well, we're not paying ourselves very much till we get to, probably break even, more or less, right? So, but everybody's vested. Everyone's got skin in the game here. Everyone has, a significant stake in the company. Everyone on the call here, has significant shares in the company, as does Sinead. Sinead's putting some money in this round as well. So we're kind of gone all in on this, and the manager compensation, like I say, we will adjust it, but not until we're in a position to do so.
And just on the subject of scaling up or break even, what is the roadmap for I suppose the next 12 months with Hurricane as kind of your first distribution partner, and are there other Hurricanes in prospect?
Well, Hurricane are very important to our whole story. So it's when you want to outsource some of the functions at an asset manager, it's a much better model. I mean, Mark would tell you he had to do everything from scratch, compliance, etc., back in the day. Now, effectively, we can outsource that, or partner up with Hurricane, for instance, in terms of regulations. So they're SEC regulators, they're FCA regulators. We're a portfolio manager to them. Therefore, that takes care of that kind of area for us, and it's very, very important because it means that your time to market is truncated greatly by that. And then also things like if an institutional customer comes along to us and says, "I want to put $100 million into a single managed account at Goldman Sachs," Hurricane has all those facilities open, ready to go, and that's very important to us too. So the plan really is to go after assets in the US, essentially on the traditional finance side, so the US equity strategies we showed you, because the US clients are far more responsive in many ways. They're far more willing to entertain newer managers, and we kind of build from there. On the digital asset side, we actually are in we're in talks with Binance about getting our strategies live on their platform, hopefully in the next week or two, test some test accounts. But again, they have a lot of clients that they would like to encourage them to have somebody managing a portion of their holdings as opposed to just buy and hold the whole time. It's a win-win-win for everybody, because obviously if you do a good job, then they won't suffer a 20% correction like they just did. But they they will have some kind of a hedging strategy in place. We get paid for that, but also Binance then have customers who are more active, which is what they're all about. So I think that's a very kind of exciting prospect.
Yeah, the Binance angle actually is, again, it's a whole separate distribution angle there. It's very interesting. Listen, I'm very conscious of time. We contracted everyone so to get them off by about 2 o'clock. There are, because it's Spark Private, our relationship managers we can see some further questions, quite a few questions, which we'll answer offline or get you even to do some follow-up calls on those that are,
absolutely, yeah,
detail. But really appreciate the time from Declan, you and the team. Again, a compelling story around AI, a really big problem in the investment management world. I think the standout thing is always, does it work? Well, you got a very powerful illustration today in terms of it's very current, in terms of digital currencies having a rough time, and Nazare Point delivering absolutely what it's supposed to do, which is performance for lower cost and less risk at stake. So it is maximizing returns for lower amounts of risk. And I think a couple of those charts are well worth reviewing and keeping in mind in terms of, and one, and I suppose keeping in mind as you hear the news of Nazare Point going onto the Binance platform. So two great companies. Thank you, Declan. Thank you, John, and the OOHPod team. A reminder again, it's 5% EIS. It is EIS season. These are two companies, I think, that are at a sort of different stage in time horizons in terms of exit opportunities versus other startups. And so it is something to consider for those that are building portfolios right now. And going back to the Nazare point, it's about diversifying your risk and getting the right returns horizons around your portfolio. So thank you, Fergal. Thank you, Declan. Thank you, Mike and Dermot. As I said, we're happy to field any more queries offline. But thank you, and look forward to speaking to you. As I said, these campaigns have a couple more weeks to run. So happy to help on that.
Thanks, Gary.
Cheers, guys.
Thanks, Gary.